Grand Rising. Good afternoon. Good evening. Today I just want to go in a little bit about whole life insurance. I don't know if many of you are aware about whole life insurance and the benefits of having whole life insurance compared to term life insurance. There's been a lot going on that we haven't been aware about as a community. Most of us, whole life and what the advantages of having whole life insurance as opposed to term life insurance, and why it's beneficial, in particularly for the so-called black community. Since we have a hard time saving money and things of that nature and getting loans and so on and so forth, with a whole life insurance policy, you would be able to bank yourself with that. That's right. You'll be able to bank yourself with that. And how a whole life insurance policy works, you get what you call a rider. It's a paid up rider. And what that does, it'll give you like equity in a building. That money that you put in that life insurance, you will be able to get a loan from the insurance company based upon the money that you put in there. It's called a cash value on the life insurance policy. Then they have the death benefit on the life insurance policy. That's at the end of the term. When you pass away, your beneficiaries, your children, your love, your husband, your wife, or whoever decide to leave as a beneficiary, they will receive the rest of that. So say you got a $100,000 loan, and you'd get a paid up rider and put 20, 30,000 in it. You won't be able to touch the money, most of the money. Well, you'll be able to touch. They have riders where you can put, you'll be able to get 80 and 90% of the money right back out. And so you got a $100,000 policy, and you'll be able immediately to take that money right out. If you got a paid up rider, that means you put the initial money in from the beginning. When you want to get a rider, you want to get a insurance policy that's about, 4 or 5 years, and you pay that $10,000. You pay about 4 years on that, and it accumulates, compounding over and over, year over year and over, year over year over year over. Keeps compounding. And all you have to do is get the right type of policy. Term life, exactly what it means. Term life. That means 10 years, 20 years that expire. All the money that you paid into it, you don't receive any of that. That's what's better about whole life insurance. And I want to bring this to so-called black people attention, because a lot of us, a lot of loved ones pass away and they don't leave anything behind. And this is one way that you can leave money behind, as well as use the money while you have the policy. You'll be able to take loans against the policy from the insurance company, a mutual insurance company. So it has to be a mutual insurance company. And what that means is you're in partnership with the insurance company. You and them are in business together, but you are the controller. You are the one who gives the decisions and what you want to do with your money, how it's going to be allocated, so on and so forth. You're basically in control of it. It's your money, because you're the one paying into it. You direct them on how you want to use it. So I would look into it if I was you. It's a very good opportunity that's been in existence over 200 years. This is how the Rothschilds made their wealth, or a lot of your wealthy people, they do their banking with their life insurance policy. They can borrow against it. They'll have $2-3 million in there, pay it up, get paid up life insurance, and they'll borrow against it to do any of their investment deals, and they'll buy another policy, and do the same thing, and it's earning interest. It's paying dividends. It earns interest every year, 4.5% to 5% interest every year, nonstop. So I don't know why you wouldn't want to be a part of that. That's a beautiful thing. It's a better investment than any other investments you can find. As far as savings is concerned, most of you have your monies in saving accounts that's only receiving 0.1%, 0.2%, or you may have your money in a CD in 3 to 4%, or you may have your money in qualified plans, IRAs, Roths. All of those have major fees, and if you take those out early, you receive penalties. A lot of you scared to receive those penalties, but I'm not an accountant, I'm not a tax expert, I'm not any of those things, but in my opinion, if it was me, it is me, the best investment or savings that I could think of to where to keep your money is inside of a whole life insurance policy. And many of them as you can get. However, how much money you earn. So if you work a 9 to 5, you making 60, 70,000 a year, and then part of your money is going into a 401k or IRA. I would withdraw all my money out of those plans and put it into a whole life insurance policy. The reason being, you're collecting two benefits from it: dividends and interest, and it's not tied to the market. So those IRAs, those and so on and so forth, all those other qualified plans, they're all tied to the market. So the market goes down, the stock go down, your portfolio goes down. So I would suggest that you put it in a whole life insurance plan and earn that money from that, and reinvest that money back into the plan. Those dividends, put it right back into it so it continue to compound year over year. I wouldn't touch it for the first 3-4 years, for the first 4 years. And after that, you'll receive interest and dividends probably for the rest of your life, especially if you start about 30 years old. The younger you are, the better you are. So if you're 25, 30, and you get your $100,000 insurance, a whole life insurance policy with a paid-up rider for the end of age 65, and you'll be extremely wealthy. You can borrow against it, and it doesn't touch. When you borrow against it, it doesn't touch your account. It doesn't touch your interest. So your interest still keeps rolling because you're borrowing from the insurance company. You're not touching your principal that you put inside the policy. So that's what's great about it. You're not touching that. You ain't touching it at all. So that's what I would do. I would, like I advise myself, I'm advising you. And that's a way you can get into the real estate game, to open your business. A lot of things you can do with that. It's whatever you choose. So once again, get you a whole life insurance policy, not term life. Do your homework, study it. It's called Investment Banking Concept. That's what this is called, IBC. You can Google it. You can YouTube it, like I'm doing. There's plenty of people on YouTube who are giving examples on how it works and how to utilize it. This is one of the best concepts I ever came across. I have to say, I've never seen nothing like it. The gentleman who invented it, his last name is Nash. I forgot his first name, but last name is Nash. He invented this concept, and I don't know, he may not be the inventor, but they give him credit for it. And I must admit, you can take 100,000, borrow against it, and it's still continuing to grow passively. You get dividends every year. So you got 100,000. It's paying a 5% dividend. That's 100,000 and 5,000 on your first year investment. Then it compounds. So that 100,000 and 5,000, you'll do the same thing next year, but that won't be 100,000. The second year be 100,000, 5,000. And then the third year compounds from that 105,000, whatever that is. It keeps compounding year over year. Your death benefits keeps accruing too. So it's a twofold thing. It keeps two things keep growing. And if you need to go buy a car or something, you can borrow against it. And whatever the rates are, say for a car loan, you pay that back in, say 5%, 6% rate on a car loan. So you put 12% in it. You pay that off every month. So instead of paying the car loan, you pay back your loan from your insurance that you took out from your money. And that compounds. So you put that money back in there, it's compounding. It's compounding. It's compounding. It's compounding. Then you get another policy, do the same thing. You take a policy out for your children. Does the same thing for them. You take policy out for your mother. Does the same thing for her. For your father, does the same thing for him. Each one of those policies will be compounding. You have to pay into those policies, though. You'll be paying premiums for each one of those policies. But that premium, if you pay enough up, you can use part of that premium for anything you want. Surgery or anything. It might not be something sad. You might want to do something happy, make you happy. So it's the best thing I could think of is a passive investment for those now that the market is about to take a turn. We've been what they call a bull market for about over 20 years. It's about 20 years we've been in a bull market. Maybe not that long, but we've been in a bull market for quite some time. So the market is due for a correction, and we don't want to be in the market when it corrects. We don't know how far it'll go down. We don't know. You don't know. You could lose a lot of your money. I have family members who lost money in the last down cycle. Everything rolls in cycles. So we're in we're in an up cycle now. Eventually, the down cycles is going to come. But you want to be prepared, be able to take those down cycles, take them in stride. That's what's most important, is taking those down cycles in stride and continue to roll, continue to gain, continue to get paid. The whole shebang. And that's what it's all about. And you can take that, invest it in the property, take it, invest it in real estate. I love apartment buildings. I'm always talking about apartment buildings. That's the best investment you could have. So with these two things, apartment buildings and insurance policies, whole life insurance policies, that's creating wealth, long-term wealth, not quick wealth, long-term wealth. When you're 70, you don't have to worry about getting around. You don't have to worry about any of that. You can put all those things inside a rider, disability rider. If something happened to you, and if something happened to you, put that in your rider. That the insurance company take the premium out of your rider and pay your premiums to keep it going. If you have a disability, all those things can be added inside your whole life insurance policy, paid up insurance life policy. So it's a win-win. This will change the tide in the community. We can pass on generational wealth. That's what it's really all about, passing on generational wealth to your children and your loved ones. You don't want to leave them struggling. You want to leave them with a little grub stake, and giving them the knowledge to continue on with what you did. And that's what's really great about it. You can pass this on to your children and your children's children. So now you have generational wealth like the Rothschilds. There was a example someone gave to me. I read somewhere about the Vanderbilts and the Rothschilds. Well, the father, I forgot his name, of the Vanderbilts, he left his children $104 million, and I think it was the 1900s somewhere. And they had a family reunion in the 2000s, and not no, excuse me, in 1978, somewhere around there. They had a family reunion. How many people you think were left with their wealth that still was wealthy or millionaires after those 100 years, that from the $100 million that he left? 100 million in the 1900s is like $1 billion. You understand? More than $1 billion. How many of those people that he left wealth to, or his heirs today, still have money? Not one. But on the other hand, the Rothschilds had a plan. The father of the Rothschilds said he left his family wealth, and all of them are still millionaires today. All of his heirs are still millionaires today. And this is why. One, they put their wealth into whole life insurance policies, each one of them. And then also, in their business endeavors, there was a mandate that the father gave to each one of his children. Whatever the other one learns, he gives that same knowledge to the other children. So they all have the same knowledge, they all know the same things, and they all will grow their wealth in the same manner. So they had to share whatever that was growing their wealth, they had to share it with the other children. So whatever I was into, oil, gas, diamonds, and I'm making a profit off of it, I shared it with my brothers and sisters until they could do the same thing. That's how you grow wealth. And that's what they were doing. That's what we have to do. You want to grow your wealth, you want to be wealthy, first you got to believe in yourself. You got to believe in that you can do it without a shadow of a doubt. That's called manifesting. You got to believe that you can manifest that into existence. It's not hard. It can be done. I've done it, many times. I will do a whole video on that soon, about manifesting the things that you want. My whole life I've been manifesting. Unbeknownst to me, until maybe about the last 4 years ago, that I've been manifesting things my whole life. Everything I always wanted, I always got. You may think that's unbelievable, but I'm telling you, everything I ever put my mind to that I really wanted, I always got. Even got a prison sentence out of that. Absolutely. I didn't want it, but I put my mind into it, and I eventually got it. So whatever you put your mind into, good or bad, negative or positive, you're going to manifest it. That's why you be careful what you say and careful with your thoughts and think and what you think. Because those things will come to light. So be aware. That's the key. Be aware. What comes out of this thing here and what you think in here. Because whatever those two things do or say, that's what's going to happen. So it's wise to manifest or talk about things that can change your life positively. That's what I do. About using positivity and how I can help others achieve the goals that I'm trying to achieve, that I'm going to achieve, that I am achieving. So you got to be careful, even me. And sometimes you slip. You always want to think in the positive, like you already achieved it, like you already done, like it's already here. I can tell you, I've done it. From cars to jewelry to houses, I manifest quite a few things. But I've also brought about some negative consequences from the things I've manifested by my thoughts. A lot of us do that. We self-sabotage ourselves out of the good that we done. Maybe sometimes we don't feel like we're worthy of what we've achieved because we see other people who can't do what we do and say, why is it me and not them? Some people are just chosen, others are not. Some people are aware, some people are not. Some people choose to be aware, some people choose to be ignorant. So it's really up to your choice. Up to the wisdom is there, the knowledge is there. So I'm gonna go back to what I was saying. That was just a little sidebar about manifesting, but the most important thing is two hustles. I'm gonna call them a hustle. Passive income, insurance, whole life insurance policy with a paid up rider, 4 or 5 years, 10 years, somewhere around there. Invest in apartment buildings with a group of friends, because apartment buildings are not easy to get into. Most people can get into a fix and flip because most people want to buy something for nothing and try to sell it for high. That's pretty much the fix and flip philosophy. Buy it cheap, fix it up, sell it for high. 9 times out of 10 don't work that way though, to tell you the truth. Most fix and flips don't work that way. Maybe after 5 or 6 years you got a little knowledge behind your butt, but coming out the gate, you're gonna lose fixing and flipping. But you can invest in an insurance policy, then fix and flip. Whole life, then do that with everything. First thing you do with your money, your income from your job, put it in your insurance policy. Put all your money into different insurance policies, whole life insurance policies. The money that you're not touching, put it into whole life insurance policies. Every dime. Like I said, you'll be able to touch it. You'll be able to get it whenever you want. You might not be able to get it all in the first year. If you put 100,000 in there the first year, you maybe only can get 90,000 of it, 80,000 of it. When the second year it'll increase, you'll be able to get 85,000 of it. Third year, you'll get 90,000 of it. Fourth year, you get 100,000 of it. You get the whole amount. But each year, it keeps increasing, year over year. So, and you can use it. Borrow the money from the insurance company, your money. But it's gonna be like you're using their money. It's like a secured loan backed by your insurance policy, your whole life insurance policy. So if you don't pay it back, they'll take it out when you pass. When you die, that means your heirs, your descendants, will receive 90% less. So if you had $100,000 policy, $100,000 policy, and you didn't pay the 90,000 back that you borrowed against your policy, your heirs would just receive the 10,000 minus any fees. So, but if you let it sit, you can still use it. Just pay it back. That's the key. Pay it back. If that same car loan you was going to use the finance company to finance it, you finance it through your insurance policy yourself. So if they were going to charge you 5% on the loan, you charge yourself the 5% on the loan. If the note's $250 a month, you take that $250 and put it back into the policy plus an additional $250. So you can make it grow faster, bigger, larger. So you'll have money you can use over the course of time, and when you pass away, you leave your children, your husband or wife, money. So they won't have to work as hard. You make it easier. And they also have additional policy. They may have taken a policy out on you, because once you know it, you work like the Rothschild said. You should have taught everyone in your family this strategy. So, not just your policy, their policy, and everybody got a policy. So everybody should benefit. It's a no-brainer. So I'm gonna leave you guys with that. I don't like to be long-winded. If you want any more information about, I forgot what this is called, but banking concept, investment banking concept. Subscribe, hit the bell, or leave a message. And I'm always going to leave you with, you know what it is. Psalms 82:6. Ye are God's. Peace.